Hello, good morning. You're tuned into Trading Hour, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Hormaz Pataki as well. Hormaz, very good morning. We are in shades of blue, but market is not going through any midweek blues. You and me, Hormaz is looking like he's going through those blues. But look at it, Hormaz. We're seeing 25,200 on the Nifty again today. So it's an interesting day. 0.6% again. Broader market's doing well. Not outperforming, but doing well.
The green turned into blue yesterday. The bulls would be hoping that does not happen today. But of course, unlike the very, very sharp moves that we saw earlier in the day yesterday, and then that very sharp cool off, fairly steady so far in the first 120 minutes of the trading session so far, 160 points higher on the index. Of course, still well below yesterday's high. So it's still about that 25,200 mark. The broader market's doing fairly well for themselves, even in today's session, 0.5% higher on the mid-cap index. Similar sort of gains seen on the small caps as well. Now, plenty of individual movers in the broader markets. Of course, the small cap index, though, that's the bigger outperformer in comparison to the mid caps and even the benchmarks for that matter. 1.5% higher on the small caps. So look at the movers. MTNL is now up 17%. In today's session is the top gainer on the small cap index. In fact, Balaji Amines is the other one that has seen a very sharp spike in just a few minutes. 11%, almost 12% higher now on Balaji Amines. There you can see there 12.5% higher. Infi Beam is up 9.5%. Kirloskar Brothers is up 9.5%. In fact, another mover, Barbecue Nation, 6.5% higher on that stock. That too has seen a very, very sharp surge in today's trading session. At the highest point of the day is Barbecue Nation, of course, well below its IPO price. But into some of the other specific stock movers in today's session, and one of them is IEX, and that is on the back of a Bernstein note, which has upgraded the stock. It's off the highs of the day, but Vivek is here to tell us more on what Bernstein has to say on IEX. Vivek, good morning.
Well, good morning. Very interesting note that came in yesterday from IEX, from Bernstein on IEX. Earlier, they had an underweight stance as far as IEX was concerned. They've upgraded it to a market weight rating. They have a target price of close to 160, still below the CMP. However, they've gone ahead and said what was their earlier stance and what is it that they believe about IEX now. Number one, they believe that volumes would be soft as renewables won't come to the market. However, that thesis has now changed. You're seeing a lot of renewable energy coming into the spot market as well. Along with that, they have mentioned the transaction charges at this point of time is unsustainable, given the fact that in India, spot market broking charges or transaction charges are quite high. They believe it continues to remain high, and on that particular parameter, they continue to hold on to their earlier theses. They believe that when it comes to market coupling, which is the single biggest risk as far as IEX is concerned, they see the odds at 50%. So again, they're not really taking a call on whether or not, that particular development, they're not taking a call on which way it would go, but they continue to see it as an important risk. They say that to upgrade it or to downgrade the stock from this point on, they believe that market coupling outcome would be the key trigger. So overall, they've changed their stance as far as renewable energy power coming onto the spot market, and this is the reason why they've upgraded the stock doing reasonably well in today's session.
Okay, Vivek, thank you so much for that. Surely keeping an eye out on IEX. But there are two other stocks that are in focus on the back of brokerage notes as well. That's Titan as well as Indian Hotels. Mangalam is joining in with us to give us more details on this one. Mangalam.
And they have an outperform rating. Their target price stands at around 4150 rupees. What they say is that their channel checks suggest that there has been healthy demand in the first quarter for jewelry business, and they believe that in FY25, the jewelry business margins were under pressure. It's bottomed out, and from here on, they are likely to see 20% growth in jewelry sales and operating profit in the first quarter, and that is likely to do well for them, which is a positive. And on the back of Titan, we have some other jewelry companies as well running up in today's trading session. The other one I'm looking at is Indian Hotels, where there is an initiating coverage coming in from JP Morgan. They've initiated at overweight, and their target price stands at 890 rupees. Remember, the stock has corrected about 12 to 15% from its 52-week high, and this, they believe, is temporary and likely to abate on account of, one, better than expected revenue per available room expectations or performance in FY26, and secondly, the consensus had cut EPS down because of military actions that took place in India post-Operation Sindoor, and now they believe this is likely to reverse as well, and the strong performance of Q1 FY26 on a low base is likely to bode well for them as well. not just the very near term. They believe that the FY30 targets that the company had set for itself are likely to be met ahead of schedule as well. So all these things make them positive on the stock. The stock higher today.
Doing fairly well for itself is Indian Hotels. Mangalam, thanks a lot for that. But the big story of the day, of course, is the biggest IPO of the year so far. That's the 12,500 crore rupee issue from HDB Financial Services, which has opened for subscription. Price band 700 to 740 a share. The IPO proceeds will be utilized for future capital requirements. Of course, it's a 2,500 crore rupee fresh issue and a 10,000 crore offer for sale. Earlier, we spoke to G. Ramesh, who is the managing director at HDB Financials, to understand the company's business and the future outlook. Listen in.
What we believe is that India is a huge opportunity for our business. And just to clarify to our viewers that we are a subsidiary of HDFC Bank, but we do not get any business from HDFC Bank. We are independently an entity. We don't get leads from HDFC Bank or any of the group companies. And that's been since inception. We run our own origination, our own risk management, our own collections, our own technology stack. We provide some BPO services to HDFC Bank and only to HDFC Bank. It's in the nature of collection services and some back office work that we do for the bank. That scale of that business really depends on the volume requirement of the bank. In the last few years, the bank has invested in digital capabilities, so some of the requirements have come down. While it's a significant part of our revenue, it's a very small part of our net revenues, which is our profit after tax. Given that our loan book itself is now 1,07,000 crores and generates significant revenues, it's a small portion of our net revenues in that sense. So not very material from a business perspective. Essentially, the draft rules came out about 8 months back, right? And the draft rules are really a document that's put out for discussion, which enables the industry to give its feedback. And the feedback has gone back to the regulator, and they're looking at the feedback. And as per the annual report, they're looking at the feedback. As I said, for us, the business is independent of the bank, right? And so very difficult to look at what might be the final circular at this point of time. The reason why we set up this business, independent business, is because we chase a set of customers which are fairly distinct from what the bank does, right? Or from what retail commercial banks in India do. For example, we have 19 million customers and 1,07,000 crore balance sheet, which means that our average ticket size is just about 1,65,000. We only do retail lending.
Well, it's been an hour since the IPO opened for subscription. Overall subscription so far, as I can see, is 9%, led mainly by the non-institutional and the retail investors. Non-institutional portion subscribed 13%, retail portion subscribed 10% so far. We'll keep you updated with the numbers as the day goes by. Of course, it's just the first day, so you'll keep track of HDB Financial, the biggest IPO of the year so far. Take a short break. On the other side, all things commodities with Manisha Gupta.
Welcome back to Trading Hour on CNBC TV18. The markets are managing to hold on to the gains, but what's happening in the world of commodities and specifically crude? We have Manisha joining in with us to take us through all of that. Manisha, crude is seeing that sharp decline in the last couple of days, now easing of global tension. What are we watching out for here?
Oh, well, absolutely. If you look at the yesterday evening market sense, we did see prices decline by nearly 5%. And with that, we've seen the crude oil prices go down by 11% in the matter of this week. At this point in time in the Asian markets, as you can see, we are trading nearly 1.5% on the higher side. That is because the street is weighing on the durability of the ceasefire between Israel and Iran. There still are various statements being thrown from both sides. Apart from that, while U.S. did strike 3 of Iran's nuclear facilities, but the U.S. intelligence itself says that the damage hasn't been so severe, and perhaps the nuclear activities within these sites could start in the next few months itself. So that slight premium seems to be coming back into the markets. Apart from that, the US dollar has declined, and after such a sharp sell-off that we've seen in crude, there is some opportunity buying as well happening in case of prices. Most importantly, you have seen a decline in the US inventories to the tune of nearly 4.2 million barrels. The street was anticipating 1 million barrel of a decline. So you have a very strong number coming in. That in turn has been supportive as well. Markets are also looking at the IEA maintaining that they have 1.2 billion barrels in reserve when it comes to crude and can be deployed if needed. That is what seems to be capping the gains at this point in time. But remember, it's a weekend. There's more data coming in from US today on how you close weekend. Before that, you'll be looking at a lot of volatility in the evening session for the crude oil prices. But at this point in time, there are very less short sellers now emerging because we've seen prices decline so sharply already.
Indeed, some interesting developments for crude oil finding some support at lower levels. Manisha, thanks a lot for that. All eyes, of course, now on the data coming out from the US and, of course, the OPEC meeting coming up next month as well. Let us now get you some insights from Mukesh Ambani. The Reliance Industries chairman spoke to McKinsey and discussed how clarity of goal and purpose, accompanied by the right people, can drive innovation, unlock extraordinary talent and create impact. Now, he also spoke about the big bets that Reliance had taken, emphasizing that Jio was the biggest risk the company had taken so far. Reliance was investing their own money into the venture, even as analysts voiced concerns over India being ready for advanced digital technology. The worst case scenario was that the company would not earn much return. Even at this time, the philosophy at Reliance was that it would be the best form of philanthropy for India, as they would have digitized and transformed the country. Mukesh Ambani also spoke of Reliance's plans in the domain of artificial intelligence, where the purpose is to solve complex problems and create wealth for the nation and for its people. He highlighted this has to be the reason behind Reliance not entering the high-risk GPU game and deciding to take the downstream route. Reliance is also making a big-ticket entry into green energy with one of the world's largest manufacturing ecosystems for clean energy, covering solar batteries, hydrogen, and more. And the Reliance Industries chairman terms this to be the company's contribution to saving the planet from the looming climate crisis. Speaking of the future, Mukesh Ambani said he remains confident that Reliance will continue to serve India and humanity well into the future, but also warns that the confidence of the next generation to succeed in developing landscape will be the key.
Okay, on that note, we're going to actually slip into a very short break. When we return, we'll discuss market technicals with Mitesh Thakkar and his top bets.
Welcome back. Continuing to remain around that 25,200 mark on the index, and one stock that you just saw at the bottom of your screen that's doing well for itself right from the onset is IndiaMART, and that is on the back of an upgrade that has come in from Nuvama. Vinny, it seems as if Nuvama is now turning a corner on IndiaMART, believing that IndiaMART is turning a corner.
Yes, absolutely. They believe IndiaMART is turning a corner, and that's why that upgrade, right? Because they reduced and downgraded the stock previously somewhere in 2023. Now, from a reduced rating, they have moved to a buy rating. So, upgrading the stock there, raised the target price. 3,800 rupees is the new target price. Previous was 2,100 rupees per share. Like Hormuz is also saying right now, the business they expect will take a turnaround. They expect new demand cycles starting for IndiaMART and MCX. They believe the management is now moving on a right path, and management had been taking actions over the last couple of years in terms of reducing that competition on the supplier front. Overall, in terms of headwinds for the company, that is bottoming out. And now, going forward, specifically Q2, FY26 and onwards, they expect subscriber growth to come in for the company as well. That addition over there will start improving furthermore from Q2, FY26 and onwards. So, on the back of this, they have increased their earnings estimate by 9% for FY26 and 10% for FY27. Other than that, they're raising their target valuation also. Previously, it was around 22 times. Now it's 35 times. All this mainly driven by the growth prospect of the company. So they're positive on the demand trends, positive on subscribers, the addition that will come in for the company. So overall positive on the stock. That's why the stock is buzzing in trade, holding on to gains of almost 5% in today's trading session. But shifting focus to an exclusive, now the deadline to submit bids for Jayaprakash Associates is under bankruptcy process. The bankruptcy process that has ended. Now sources are saying that at least 6 bids have been received. Let's go across to Ritu, who's picked up some details on this front. Ritu, what are you seeing here? What are we expecting now going forward here? Okay, I think we'll connect with Ritu in a bit, but this is an important story and Ritu had picked up details on this front as well. So yes, we'll connect with Ritu. But let's move on Mahanagar Gas for now. That's also the one that is trading with gains, and this is coming in following a bullish note from Citi. Sudarshan is here to tell us more details on this one. Sudarshan, good morning.
Good morning, Vinny. So Citi has a buy call on the stock and target price is 1700, implying an upside of almost 18% from current levels. And today Citi has opened a positive catalyst watch on the stock. So it has mentioned few catalysts for the stock. First one is volume growth. It believes that company is going to register 10% plus volume CAGR over next 2 to 3 years, and that can start very much from Q1 of FY26. Second, margin tailwind. In Q4 of FY25, company had reported margin of rupees 8.30 per SCM, which Citi believes can rise to rupees 9.50 to 10 going forward, and that can happen mainly because of the recent fall that we have seen in crude. Third is clean fuel mandates. It's saying that if there is any positive development from Maharashtra government regarding transitioning or phasing out petrol and diesel vehicles to CNG, that will be positive for MGL as well. And last one is merger and acquisitions. It believes that CGD sector consolidation is inevitable and it can be beneficiary for large players like MGL, and that's the reason you are seeing an uptick in the stock. Currently, it's up around 2%.
Positive catalyst watch from Citi there. Sudarshan, thanks a lot for that. Closing on 1450 levels is MGL. But the other one that has had another bullish note today coming in from UBS this time around is MCX. And it is the first time that the stock has received a 10,000 rupee price target. Vamakshi is here to tell us more on that. Vamakshi.
Well, Hormaz, UBS has maintained its buy rating on MCX, but have managed to raise their target price from 7,000 earlier to 10,000. And the rationale behind this is as follows. First up, they're expecting very good growth in Q1, especially in average daily value. Now, keep in mind that in Q1 so far, they report that the futures ADV saw a growth of almost 50% sequentially, driven by a sharp rise in bullions. The option premiums ADV was also quite healthy at 4,300 crores, an uptick of almost 30% sequentially. And this in turn would lead to a likely growth in terms of trading revenue between 34 to 35% quarter on quarter, and an uptick in net profit of around 50% sequentially. Now, they also highlight the second factor, which is new product launches. They believe that this will support the growth for the company in the near as well as the medium term. They believe that conservatively, the electricity derivatives, which they just launched very recently, could contribute around 3% to the revenues in FY28, but they do see some further upside potential out here. They're expecting good traction in new silver options, especially given the preference for near-to expiry contracts. Given all of these factors, they've gone ahead and revised their estimates upwards. They're expecting a 26% earnings CAGR from FY26 to 28, and they've revised their EPS estimates by around 13 to 17% for FY27 as well as 28. Now, as far as valuation is concerned, the stock is trading at around 42 times FY27 EPS estimates, but they believe the market is not fully pricing in new product growth potential, operating leverage, and benefits from higher volume, and that is the reason why they've gone ahead and upped their target price to 10,000 per share.
Okay, Vamakshi, thank you so much for that. Stock holding on to gains of more than 6%. But like we were talking about before, let's put the spotlight on Jaiprakash Associates. And this is an exclusive where we're picking up that the deadline to submit the bids for Jaiprakash Associates under the bankruptcy process has ended. Sources tell that at least 6 bids have been received for this. Ritu is here now to give us those details. Ritu.
Well, yes, that's right. Top corporates have lined up to throw their hat in the ring for Jaiprakash Associates under the bankruptcy law. And our sources indicate at least 6 suitors have come forward to submit binding offers for the company with that deadline ending on Tuesday. Now, these include names like the Adani Group, Vedanta Group, Dalmia Bharat, the Naveen Jindal Group, as well as listed infrastructure company PNC Infratech. And interestingly, another JP Group company, JP Infratech, which of course is now controlled by Suraksha Group after having gone through the IBC process itself. Now, these bids are yet to be open, so we don't know the offers yet, but there is a meeting of the Committee of Creditors where the offers will be examined and then the negotiations will start. But some of the banks that we've been speaking to indicated that while typically it is the bidding process where the price discovery happens in IBC, but in this case, the National Asset Reconstruction Company or NARCL's offer of 12,000 crores to acquire Jaiprakash Associates stress loan from the banks earlier, that could serve as a benchmark for the prospective bidders. Now, we had earlier reported as many as 25 entities had shown an interest with an expression of interest for the company, but now, as we're reporting, only a handful have come forward. But that said, it is a key milestone in what has been a very long-running insolvency case. Remember, JP Associates was first identified by RBI in its second list of large defaulters back in 2017 and was finally admitted into the NCLT only last year. It is the flagship company of the group with interests across real estate, hospitality, cement, engineering, construction, and so on, and is facing claims of more than 57,000 crores from the lender. So now, all eyes on how the bidding war plays out, especially with these kind of high-profile names in the mix.
Another step in this resolution. Ritu, thanks a lot for that, in the resolution process at least. Well, Mitesh Thakkar now joins in for a quick chart check and some trading ideas as well. Mitesh, good morning. Thank you for joining in again. Well, 25,300, we couldn't sustain those levels, but we are fairly okay as of now. What would be your trade, not just for today, but over today and tomorrow, considering its monthly expiry tomorrow? Do you carry positions over into the next series, or do you wait for expiry to happen somewhere around 25, 150, 250? What's your call on the index and your stock ideas as well?
So, good morning. I would definitely want to carry my positions. I think, on the stock side, there's no worry. On the index, we haven't been trading much, taking some small quantities. Though the Nifty structure is positive, 2-hour closing about 25 to 50 might be, something which will give you confidence for taking some long positions. And then we can look at a continuation on the upside to about 25, 450, 500 zones at least, and then maybe higher. So the structure is good, but for the time, I'm getting with more of stock buys.
What about stocks, Mitesh?
I have a buy on Indian hotels. I think after a good correction and consolidation, the stock is trying to break out. So buy here with the stop just below levels of 770 for targets of 805. And Crude is the other one, which is also seeing some positive crossovers on the intraday and the daily charts. So buy here with the stop at about 232 for targets of 245.
Okay, keeping an eye out on those two stocks as well. Mitesh, thank you so much for joining in with us as always and giving us your views on the market as well as individual stocks. But on that note, we're going to sip into a very short break, and up next we'll come back and discuss market fundamentals now with Sahil Shah from Equirus Asset Management.
Welcome back. Taking the conversation on the markets forward now with Sahil Shah, who is the CIO at Equirus Asset Management, who is joining in. Sahil, good morning. Thank you for joining in. Before we get to your top holdings, and there are some interesting names there, we would like to talk about those in greater detail. We are on the cusp of earnings season starting up. I'd like to talk firstly about the consumption bit, right? There has been conflicting reports or contradictory reports, if you could call it that. There's one brokerage citing almost a $40 billion consumption boom over the next 2 years, but the macro data on ground seems to suggest otherwise. Where in the consumption basket are you placed, be it discretionary or staples? I see your discretionary is one of your largest holdings. Where within the consumer discretionary space are you bullish on?
So good morning and thank you for having me here. So we are very much positioned on the discretionary side on the consumption side, and more importantly, we believe that a lot of companies which have done consistently well on the consumption side, they are trading at high valuations. So what we are more positive on is on the turnarounds in the consumption space, as well as some of the names on the jewelry side, where we believe that the formalization of on the jewelry side is going to continue over a longer period of time. Maybe there is a 6 months to 1 year of subdued growth that might turn up. But from a 3 to 5 year perspective, I think jewelry and some of the consumer discretionary names where we see a lot of margin upside potential should do well. And that is where we are finding a lot of value.
Hi, Sahil, right. So you're finding value coming in on the jewelry side is what you're talking about. And I see in your holdings also you do have Thangamalai jewelry, but are there any other options that you would look at? What is the strategy here in terms of overall? Other than jewelry, are there anything like hotels or luxury side that is something that you would watch out for, given that's also a discretionary bet?
Yes. So, I mean, we are not, we don't have anything on the hotels or on the other names that you mentioned. More importantly, a lot of our weight is also inclined towards consumer discretionary side, where we are seeing significant margin expansion in some of the names, whether it is some bedding company or some of the consumer durable names. So we believe that the top line growth, X of jewelry and X of certain segments within the consumer discretionary space will continue to be around 10 to 13 odd %. But what will really drive the earnings growth will be the margin recovery in some of the names that we have identified.
Interestingly, Sahil, Thangamayil in your holdings were in a field where you have names like Titan, Kalyan Jewelers, Senco, and a lot of others. What drives your conviction on a name like Thangamayil? Is it just because of the smaller size and it has the scope to grow larger? What is your rationale on this?
So I think Thangamayil has been present in very micro markets, and now they are going into a very large market, which is the Chennai region, which itself is a very, very big market compared to the size of the company that it is. And as the company is able to successfully expand into those markets and they go into more southern markets, I believe that there is a lot of scope of growth, at least in the southern market itself, where Thangamayil Jewelry is a good brand name. So that's
Right.
what is driving our conviction on Thangamayil Jewelers.
Sure. Sahil, I just want to understand your thought. Overall, now in the markets going forward, do you believe the broader end of the markets, right, the small cap or the mid cap will see a better performance versus large cap, even in terms of earnings that you're watching out for? Because last 6 months, I think small cap is down 1%, while mid cap is up 2% and Nifty is up 6%. This is the 6 month that I'm looking at. So you are expecting outperformance now from the broader end of the market.
Yeah, so I think so. What has happened is that post-COVID, the earnings growth of small and mid caps has been far superior as compared to the large caps, and that also drove the performance of the small and mid caps from post-COVID levels to almost in 2024. Now, in FY25, what happened was that there was a convergence in the earnings growth of large caps as well as small and mid caps, and both grew by in the mid single digits. Now, as far as small cap is concerned, people typically don't invest in small cap for a mid single digit kind of growth, and hence the small cap performance in FY25 suffered. Going forward, what we are expecting is that small caps will start outperforming the large caps, as it has happened post-COVID. And if you look at even longer-term history of 10, 15 years, small and mid-cap earnings typically outperform large caps by a good margin. And I think that thing will resume in the next 2 years. And as that happens, I think small cap outperformance should again come back.
There are a couple of other names in your list, Sahil. Kolte Patil is one of them. It's just undergoing a takeover process right now. IFB is the other one, two completely different. Now, a lot of analysts, experts believe that real estate is currently in the midpoint of its upcycle. Do you believe that Kolte Patil also does that carry the same rationale as Thangamayil does? Because Kolte Patil too is present in a lot of micro markets and is moving into larger ones now. And what about IFB? Because a lot of these durable manufacturers have spoken of challenges on ground currently, especially because how the summer turned out to be, which is their peak season. Tell us your rationale for these two.
So as far as real estate cycle is concerned, there are pockets, there are regions where if we speak to the management, they themselves are saying that 60-70% of the buying that is happening is not because of the own consumption, but it is more driven by investments. And whenever that has happened, we have seen that there are real estate bubbles that have been created. Now, this is more region specific, and this is not happening across India. Where the stock specifically you mentioned is present into is more into Pune markets, and now increasingly getting into the MMR region, which is the Mumbai region. So that is the reason why we are quite comfortable. And with the new private equity entering in, more aggression is what we are expecting in terms of pre-sales growth, which was lacking for this company over the last 2 to 3 years. Now
Yeah, please go on.
Now coming to the other consumer durable name that you mentioned, as I mentioned that in some of the consumer durable or consumer discretionary names, we are expecting a good amount of margin recovery to happen. The companies have demonstrated some bit of margin recovery in the last 1 year, but a large part of margin recovery, if it happens over the next 2 years, then there is a good valuation re-rating potential that these stocks can have.
Okay, Sahil, thank you so much, for joining in with us on the show and giving us your time, helping us understand the outlook for the markets as well as the sectors and stocks that you're looking at. But on that note, we're actually going to slip into a very short break. But remember to tune into all new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m. Welcome back to Trading Hour on CNBC TV18. Now let's shift focus and put the spotlight on Tata Motors, as Tata Motors tells CNBC TV18 that they are preparing alternates for exports amidst the volatile geopolitical situation. My colleague Parikshit caught up with Executive Director of the company, Girish Wagh, and began by asking about the much anticipated demerger. Listen in to excerpts from that conversation.
Entire demerger process is going as per the announced timeline. We've had received the shareholder approval also. Now we are looking forward to NCLT approval. And I think during this calendar year, we should have the demerger happening and both the companies listing separately.
Okay. Now, in terms of how this is going to help the passenger vehicle business, which will be housing both Tata Motors and JLR, and the commercial vehicle business, which will be a separate entity, different brokerages and analysts have said that this will simplify the structure but will not lead to any material unlocking of value. How would you address those concerns?
So I think the value generation is finally going to be basis how do both the businesses deliver their strategy, right? And to speak about the commercial vehicles, we have in the recently concluded Investor Day laid out our strategy for the next 5 years, the aspiration to grow, and what are the various avenues that we are looking at, not just to grow the revenue, but also how do we achieve resilient financial margins as we go ahead, deliver strong return on capital employed, as also robust free cash flows. So I think once we start delivering these kind of results on a year-on-year basis, quarter-on-quarter basis, that is something that should lead to value creation.
Right. What would be your outlook for growth in this quarter and also for the full year FY26 right now?
So FY26, I'm still looking at a single-digit growth happening across the segments. And within that, I'm more bullish on the buses and vans, followed by the heavy commercial vehicles. So I think these are the two segments where we should see higher growth. But at an overall commercial vehicle industry level, we should see single-digit growth. And this is despite having a shift happening towards higher tonnage vehicles.
Could you also give us a sense of your offtake in terms of the EV business?
The EV business, let me go segment by segment. I think in buses, we have been operating now more than 3,600 buses across 10 cities. Cumulatively, they have covered more than 31 crore kilometers. So we have a lot of experience under our belt now. And while doing so, we have, I think, fine-tuned our model for managing these buses. We achieved an EBITDA break-even during the last year. I think we are going to further improve the financials during the current year. And we also have been discussing with the government agencies on two aspects. One is the payment security mechanism. And second is migrating towards an asset-light model because we can't afford to have these many buses on our balance sheet. I think all these things seem to be falling in place, and therefore we should be up for the next tenders which may be coming up.
Right.
This is about buses. In small commercial vehicles, I think unfortunately the FAME incentive which was available for the last mile mobility was removed during the last year. But despite that, I think we continue to sell a good number of vehicles. And just recently, that is yesterday, we have launched a new small commercial vehicle Ace Pro, which is going to be the most affordable four-wheeler, both in ICE as well as EV format. And that's something that should give us additional volumes in the last mile mobility. In addition to that, in bigger trucks, we are discussing with specific set of customers in cement, steel, and port kind of end-use applications to deploy specific heavy trucks for their restricted kind of an application. So that's the progress which is happening on electrification.
Finally, sir, the geopolitical tensions that we are seeing constantly, issues related to rare earth magnets and supply chains, domestic pressures as well, how is that going to impact pricing and production in the months to come?
So, 20% of our international business or export actually goes through that channel. So that's something that we are keeping a track of, and also then creating alternate routes by which we can reach our vehicles to Middle East. But I think as of now, we are keeping a track of this and be prepared with action plans.
Interesting conversation there with the management of Tata Motors. Take a short break. Just as we do that, some good news for our viewers. India's business news leader is now just a click away, and that is CNBC TV18's all-new app, where you get breaking news, in-depth articles and financial world updates right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that comes up on your screens to download the app. Take a short break. Back in just a bit.
Welcome back to Trading Hour on CNBC TV18. But let's shift focus and talk about a couple of names that are in focus on the back of order wins. KC International and L&T Tech. Upasana is joining in with us to give us details on this front. Good morning, Upasana.
Good morning. First up, let me start with KC International. The company continues to get slew of orders. Now, this time, company has bagged new orders worth 1,236 crores for civil projects in India. And the company says that it is the largest order that the company has received in building and factory segment. Mind you, earlier this month, company secured new orders worth 2,211 crore in its T&D segment. And with all of this, company's YTD order intake has surpassed 5,500 crore with a growth uptick of nearly about 35% on a year-on-year basis. Now, next up is LTTS. The company is selected as an exclusive global engineering partner for enterprise data and digital services for a global energy major. This is a 5-year agreement valued at more than $50 million is what the company has indicated. So all in all, these two stocks remain in focus on the back of the order wins.
All right, Upasana, thank you so much for those details. By the way, one of the other names also that earlier won an order in the day was Surya Roshni. That too is trading with healthy gains after the order win that it had won just before market open. So it's off the highs of the day, still 4% higher is Surya Roshni. By the way, the other active buzzers is Sammaan Capital is one of them, 15% higher now on the stock, among the top gainers in the broader markets today. And the other one is Solara Active, and that has seen a very strong up move in the last few minutes, just like Sammaan Capital. Over the last 1 hour, that stock has moved to the highest point of the day. And take a look at Solara as well, just after 11 o'clock, now 13% higher on that stock as well. You take your leave on this edition of Trading Hour. We leave you with the Nifty just at 25,200, 600 points higher on the Sensex as well. From Vinny, myself and the team that put this show together, thank you so much for watching. Halftime report on the other side.